This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back. Let's take a look at this week's auction preview numbers. There will be about 2,200 auctions held across the next 7 days. That's down just 8% when compared to the same time last year. Victoria is leading the country, expecting more than 900 auctions, though that's down 18% on last year. New South Wales, you're looking at 815 auctions, with about 130 of those scheduled in the regions. Queensland auctions are down 10% on last year's numbers, with 242. South Australia will host 123 auctions. That's down 26%. And in the ACT, trending downward as well on last year. 83 auctions expected from tomorrow. This week's most viewed auctions included 126 Sackville Street. It's a luxurious family home in Kew, Victoria. It's got 5 bedrooms, 5.5 bathrooms, indoor-outdoor entertaining. Price guide is from $10 to $10.5 million. 29 Moorhead Street in Camberwell, also in Melbourne, looks like a charming home featuring light-filled living spaces with 2 living zones, 4 bedrooms, 4 bathrooms and a studio garden retreat. Price guide is $1.6 million. 1 Coorang Road, Glen Iris, another Melbourne property, has 4 bedrooms, 3 bathrooms and sits on about 800 square metres. Price guide for this one is up to $2.5 million. And rounding out the list is 12 Arras Place, Preston's in Sydney. This 4-bedder has 2 bathrooms and a double lock-up garage. Asking price is $800,000. And the top listing this week goes to 31 The Common, located in Beaumont in Adelaide's southeastern suburbs. This 2-storey home blends mid-century and modern design with landscape gardens and a glass frontage. The ground level features open-plan living spaces with natural light, a large modern kitchen and a huge main bedroom with a walk-in robe and ensuite. Downstairs, there's a family retreat and 3 bedrooms. Enjoy your own oasis outside with a magnesium filtered pool and lush grounds. Other features include ducted aircon, integrated speakers and an alarm system. This contemporary home is close to local parks and a range of schools. Well, to break down the auction numbers, I spoke with Angus Moore from REA Group a little earlier and started by asking him about the amount of stock that's coming back onto the market.
Thanks for having me, Ed. It's a pleasure to be here. Yeah, you're exactly right. We've certainly seen the number of auctions coming over February picking up and coming into the autumn selling season. That's kind of what we'd expect to see. That said, it is still a bit quieter than what we were seeing last year. You know, the number of auctions is down about 8% compared to the same time last year. That's probably consistent with what we're seeing broadly when we look, across broader selling conditions. Things have looked a little bit better in the last couple months. Auction clearance rates are up into sort of mid-60s, which is better than the sort of mid-50s we were seeing late last year, but they're not what we were seeing at this time last year, when conditions were really very hot, or spring 2021 when conditions were certainly very, very busy. And things like how long it takes to sell a home are also off. Buy demand on realestate.com.au, it remains pretty solid. There's still a lot of people looking for homes, but again, it's not what we were seeing this time last year.
Okay, so clearance rates picking up though around that 65% mark, and we've just started autumn. So how does autumn go for property sales?
It tends to be a pretty busy time of the year. Seasonally it is one of the peaks alongside spring. It's a nice time of year, sun's out, good time to get your property open for inspection and get buyers in, and we'd expect to see that again this year.
Look, one of our top stories on the program today was about how the number of first home buyers applying for home loans in January dropped to its lowest level in about 5 years. This is from the Bureau of Statistics. What's this really telling us about the property sector at the moment?
Yeah, it's a very interesting story, Ed. I think good one to lead with and very interesting to talk about. We've certainly seen a big change in first home buyers from what we were seeing pre-pandemic. It's important to remember 2021 was a very busy year for first home buyers. We saw about 160,000 new first home buyers in 2021. That's one of the busiest years we've had in 2 decades. It's only just behind what we saw in 2009 and really not very far behind at all. Obviously, we're seeing a big pullback in that in recent months, and certainly coming into 2023, we'd probably expect that to continue to be the case. And the big driver here is interest rates. First home buyers tend not to have large deposits. They tend to be borrowing a large share of the value of their home, many borrowing more than 80%. And so they're the group that have been hit really hard by the fact that interest rates have risen very quickly. That's pulled back borrowing capacity for new borrowers by quite a lot, as much as a quarter or more. and that's restricting first home buyers from getting into the market.
Right, so yeah, that's really dampened demand from the first home buyer sector. But I want to talk to you about something else as well. The PropTrack Property Price Index for February, it shows prices went up. So what's happening there?
Yeah, you're exactly right. We saw prices nationally up about 0.2% in February, which is a bit of a change from what we've been seeing. And it wasn't isolated to any particular city either. It was pretty broad across the country that we saw prices increase. Hobart was the exception, but Sydney and Melbourne were both up, which is a big change given that they had been sort of the underperforming cities for much of 2022. In terms of what's going on there, a bit hard to know, but part of the reason could be just that there just hasn't been a lot of new stock coming to market in recent months. And so what is there is getting bid up. That said, it is just 1 month. We're still expecting that prices will continue to decline this year, in large part because of how quickly the RBA raised interest rates last year. We haven't seen the full impact of that flow through to prices as yet. And we're also expecting that the RBA's probably got a couple more interest rate rises left to go. So that will continue to put downward pressure on prices.
Yeah, I guess people were hoping maybe we're at the end of the downturn for property, but obviously you're saying that's really not the case because RBA meets next week. So can we lock in another 25 basis points from the central bank?
I think we probably can, and I think that means we're probably not quite through the downturn in prices just yet. I'd expect to see the RBA raise again this month and probably a couple more times from here, just because I think they won't feel they've done enough to get inflation under control. We did have some inflation data out this week, the monthly indicator of CPI, which isn't the full official inflation measure, but it does give us a bit of a read. It was off. So in January, we did see less inflation than we saw in December, but it was still clearly too high, which is, I think, going to encourage the RBA to continue on their path. It's probably broadly in line with what the RBA was expecting. They were expecting that December was kind of the worst of it and that inflation's going to get better from here, but it's still too high. And I think they'll feel they need to do a couple more interest rate rises at least to get it under control.
Yeah, and this week, apart from the inflation figures, we also got the GDP numbers for the December quarter, and it looks like the economy is growing a little bit slower than what people were expecting. So that's also a sign that the rate impacts from the Reserve Bank are starting to affect the economy in a bit of a slowdown.
Yeah, it's a great point, Ed. And we certainly saw that in consumption too, which is the household sector of the national accounts and of the economy. Consumption growth was fairly soft, which does suggest we might be starting to see the impact from those higher interest rates flowing through into the household sector and pulling back on spending. That might start to give the RBA a bit of pause. They might start to feel they've done enough and start to worry a little bit that if they keep going too hard, they might push us into maybe not a recession, but certainly a slowdown. So I think that'll give them some pause, but probably not this month. I think they've probably still feel they need to do more to get inflation under control, but maybe in a couple months' time we might see a bit of a pause.
Well, Angus Moore from REA Group, thanks for your time today.